Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news Wall Street is reassessing its valuation basics, and there is a general pullback across the board. It started with questions about an AI valuation bubble, but is extending to others now. Risk off is the mood today. But first, yesterday's reporting of China's official PMIs for January all took a step lower, now recording virtually no expansion. This was weaker than expected. Their factory PMI fell into a contraction state, while their services PMI retreated to only a weak expansion. It wasn't the result policymakers there would have wanted, given they have been trying to stimulate their economy for more than 3 months now. If that effort is working, the core must have been quite compromised. Chinese industrial profits were reported to be 3.3% lower in the year to December than the same period in 2023. But perhaps there is some reason to be positive for December alone. They were 7% higher than the same month a year ago, and that might have been their best December on record. Hard to tell how much Beijing stimulus was part of that late effort, however. However, those January PMIs probably mean they got off to a weak start in 2025. China's tax take grew 1.3% in 2024, following a 6.4% rise in the prior year. The sharp slowing followed slowing domestic demand and a slump in their property market, all consistent with the overall economic challenges they have. And Bloomberg is pointing out that the current commercial real estate activity in Hong Kong is crystallising some very large losses. This re-rating will have loud echoes in many places. It is one of Hong Kong's worst slumps in history, with no end in sight. Average prices for office buildings, shopping malls and other properties have fallen more than 40% from their highs in 2018, eroding the value of the collateral backing many bank loans. Defaults are also rising as more property owners and developers run into severe cash flow difficulties. None of these China-based news data items will be helping the spring festival mood in the business sector. In the US, the Dallas Fed's Texas Manufacturing Survey picked up pace in January to its highest since October 2021. New orders hit their highest since April 2022, while capacity utilization and shipments also rose. Meanwhile, there was a rise in new home sales in the US in December, taking them back to mid-range for any 2024 month. And the Chicago Fed's National Activity Index improved in December. All this gritty economic activity bodes well for the 2024 fourth quarter GDP result due out on Friday. The US Treasury 10-year yield is now at 4.53% and down 9 basis points from yesterday. Wall Street is down sharply today, with the S&P 500 down 2% to start the week. And the price of gold will start today at $2,733 an ounce, down $37 from yesterday. And oil prices are down $2 at just over $72.50 a barrel in the US, while the international Brent price is now just under $76.50 a barrel. And the Kiwi dollar starts today now at 56.8 US cents and down 30 basis points from yesterday. Against the Aussie, we're unchanged at 90.5 Australian cents. Against the euro, we're down 20 basis points at 54.2 euro cents. That all means our trade-weighted index starts today at just on 67.1 and down 30 basis points from yesterday. And the Bitcoin price starts today at $99,190 and down 5.5% from this time yesterday. Volatility over the past 24 hours has been high at plus or minus 3.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.